Donald Trump's Trump Media and Technology Group, or TMTG, has made waves not just in social media, but now in crypto. In January 2025, the Trump meme coin launched, quickly hitting a $14.5 billion market cap just before Trump's inauguration. The coin's rise was meteoric, but so was its fall, plummeting by 2/3 and leaving around 200,000 wallets with losses. Meanwhile, a handful of early insiders reportedly made up to $100 million in trading fees in just 2 weeks. The coin's ownership remains murky, tied to Trump's CIC Digital and Fight LLC, fueling speculation about who really profits. The Trump coin saga highlights the volatile, high-stakes world of meme coins, where a few win big and many lose. It's a case study in the risks and rewards of mixing celebrity, politics, and speculative digital assets. As the dust settles, questions about fairness and transparency in this new financial frontier remain. On June 14, 2025, Chicago's DRW Investments, led by Don Wilson, invested $100 million for 4 million shares in TMTG. DRW, a crypto veteran through its arm Cumberland, is known for buying 70,000 Bitcoin from a U.S. government auction, now worth billions. This move signals serious institutional interest in TMTG's crypto ambitions. The timing is notable. DRW's investment came just weeks after regulators closed a probe into the firm, clearing the way for bold moves. DRW's leadership is pushing for regulatory reform, arguing that the SEC and CFTC lag behind crypto innovation. Their investment isn't just about profit, it's about shaping the future of digital finance. With DRW on board, TMTG gains both capital and credibility in the eyes of Wall Street. The stage is set for TMTG's next big leap. DRW's $100 million is just the start. TMTG aims to raise $2.5 billion, with a bold plan to buy Bitcoin for its corporate treasury. If successful, TMTG could acquire over 140,000 BTC, rivaling giants like MicroStrategy. This would make TMTG one of the world's largest corporate Bitcoin holders, tying its future to crypto's fate. The strategy is risky. Bitcoin's volatility could swing TMTG's finances wildly, impacting its stock and investor confidence. Yet, for TMTG, it's a chance to brand itself as a forward-thinking, anti-establishment player. The plan's success hinges on raising the full $2.5 billion and convincing investors to embrace this high-stakes vision. It's a gamble that could redefine corporate finance or backfire spectacularly. TMTG needed SEC approval to move forward, and got it on June 13, 2025. The green light allows TMTG to sell 56 million new shares and $29 million in convertible notes, aiming for that $2.5 billion target. SEC oversight brings stricter reporting, but also legitimacy, reassuring investors that TMTG is playing by the rules. Major institutions are taking notice. Jane Street, a global trading powerhouse, invested $375 million, joining DRW as a top backer. Their involvement signals Wall Street's serious interest in TMTG's crypto strategy. But ethical concerns loom. Trump's dual role as president and business owner raises questions about conflicts of interest and regulatory influence. The White House has sidestepped specifics, citing broad digital finance policies. As TMTG moves forward, the debate over ethics and transparency intensifies. TMTG's Bitcoin bet, backed by major institutions, could be a turning point for corporate finance. If it works, other companies may follow, accelerating crypto adoption on balance sheets worldwide. The influx of institutional capital could stabilize crypto markets, but also concentrate power among a few big players. Regulatory uncertainty remains a major hurdle, with calls for reform growing louder as the industry evolves. TMTG's experiment blurs the lines between media, politics, and finance, raising the stakes for everyone involved. The outcome will shape how businesses manage wealth and risk in the digital age. Will this lead to a more open financial system, or just new forms of concentration and controversy? The world is watching as TMTG's bold experiment unfolds.